After months of anticipation, the first spot Bitcoin ETF started trading today in the US. BlackRock rang the opening bell at the Nasdaq exchange to launch its iShares Bitcoin fund. It is one of 11 firms who got the green light Wednesday from the Securities and Exchange Commission. The new funds are meant to track the price of Bitcoin, allowing people to invest in it without owning the digital asset itself. Bitcoin is flat today against the US dollar. We've got Geoffrey Kendrick, Head of Crypto Research at Standard Chartered, joining us now. So great to have you. Great to see you again. Look, this is quite a moment. I guess a sound that I wouldn't have heard before, right? The opening bell at the Nasdaq. SEC approving first spot ETF. This is after a decade of extreme pushback against crypto. Does this help further legitimize crypto as a whole, would you say?
I think it's a watershed moment for digital assets across the board. As you mentioned, there's been a build-up of investor demand for this product for a number of years. What it does, firstly, is it creates a huge potential flow, mostly out of 401k type plans in the US. And those plans have been held back from investing in this sector for a number of years now. So we should see a huge inflow. I estimate between $50 and $100 billion this year of inflows into the ETFs. And that's at a time when supply is very restricted. Most Bitcoins are held for a very long time. So the supply curve is inelastic, demand is growing, and so price is very likely to go quite a bit higher.
So you, $50 and $100 billion in terms of inflow. So what kind of, number you're looking at in terms of Bitcoin? Where do you think it's going? Sitting at 45,000 right now, where are you expecting it to reach on the back of this increased demand with the ETF?
I think we can get to 100,000 by the end of this year. That's a number that I put out about 9 months ago. So it was well before even the ETFs were due to come up now. It's also on the back of the halving cycle, which is coming up in a couple of months as well. And then in 2025, I think we could get all the way up to 200,000. The math on that is I had a look at what happened with the first US-based gold ETF when that came out in November 2004. It took quite a few years for the ETF inflows, about 7 or 8 years in total. But over that time, the gold price multiplied by 4.3 times. And if you think about Bitcoin price right now, if you multiply that by 4.3 times, that gets you to around about that 200,000 mark. I think that happens a lot more quickly for Bitcoin than it did for gold. So I'm thinking about by the end of 2025, so just under the 2-year mark. And that's because the Bitcoin and the digital asset markets more broadly are much faster moving. There's been this build up for demand, and quite frankly, supply has been restricted given those longer term holders as well. So sharp increases are on the way, $200,000 next year.
Interesting. So Bitcoin, $200,000 by the end of 2025. It is interesting, though, that you are comparing it to the gold ETF. We know gold is the currency of last resort. It is physical. It is an asset. It's loved. It is, historical. Why compare it to gold?
I see Bitcoin as the digital version of gold. The main reason to invest in Bitcoin at the moment is to get access to the broader blockchain technology story. It has no yield in a very similar fashion to gold. So it's that, if you like, first mover market, the largest market in the digital asset space. It essentially does nothing just now. Over time, it could lead its way to being a transaction opportunity as well, similar to how gold has been in the past. So there are a lot of similarities between Bitcoin and gold. And I suspect down the track, you'll end up with Bitcoin replacing some gold in overall portfolios as well.
So money moving from gold into Bitcoin ETFs. Interesting. Okay, so here's the thing. This is an ETF. It's just, you buy into the ETF, you're tracking the price. But what does this mean for crypto exchanges, this access to this ETF? We've seen people burnt in the past. We've seen what happened at FTX. We've seen troubles at Binance and other smaller exchanges as well. That has eroded confidence. What are you expecting on that front?
So one of the reasons for those issues you just mentioned, FTX, some issues around Binance, etc., has been lack of government regulation, lack of ETFs, lack of institutional money, lack of banks being in the space. Banks like Standard Chartered are entering the space. We'll probably see others follow down the track as well, but we see ourselves as being one of the first movers in this area from a traditional financial institution. Now that we've got BlackRock and other ETFs out today, that also sees more, let's say, trustworthy traditional financial institutions in the sector. And now with the spot ETFs and hopefully some proactive regulation, that should put those issues that you mentioned into the past and see this sector come much more central as we move forward. And I suspect that's where we go. Don't forget, of course, that most, or if not all, of the ETF inflow to Bitcoin is going to be then held in custody by Coinbase, which is, of course, the largest US-based and US-listed cryptocurrency exchange as well. So I think a very large legitimization of the industry is coming. And I suspect over the next few years, most investors will have some sort of digital assets in their portfolio.
Interesting move by BlackRock, I have to say. And of course, hold you to it, 100,000 by the end of this year and 200,000 by the end of next. We'll speak in between. Geoffrey Kendrick, great to have you with us. Thank you so much.